Oil prices traded with little swings and traded in a very narrow range last week. We have seen a struggle in oil prices on the downside around 62-60 zone, which is indeed a very good support. While on the upside, remember the resistance earlier, the support earlier 64-65 zone proven out to be a good resistance. It attempted to move beyond 63.5, 64, but failing to do so, we have seen a closer of the week at 62.5. What to expect? This is a doji. Can we say we are going to see a stronger bearish candle in the coming week, or the lows are done and wait for a reversal from here? What should be our strategy in order to profit trading crude oil in the coming week? We're gonna see here with the help of charts and indicators. This is a weekly forecast. I do share my twice a day updates for crude oil, which nobody does. First, with the Asia session, I deliver the first update, and next, before the US session, before the key data releases. Thus, subscribe, press the bell icon to get the notifications for both the updates. Do like, share, and comment. Join the free Telegram channel for live market updates, and join the channel membership channel on YouTube to support the effort. Let's start. First, we'll look into charts and indicators. Towards the end of this update, I'll be giving you the trading levels. So watch till the end. Now this is purely on the weekly charts first. When you look at the crossover here, you can see the moving averages are trading with divergence, trading bearish here. And the oil prices since last multiple years, since last few years, we have seen staying in this bearish channel. It has given a brief breakout here with the rising tensions. Yes, we have seen the oil prices climbing all the way towards 78, but failing to sustain. A quick reversal is seen here. Now, other way to look at it, it has also formed a double bottom here at 55. Now, 55 is the double bottom. And the next thing you should notice is after this quick drop, prices stayed in a zone for multiple weeks. 4 to 5 weeks, we have seen prices staying in a zone, retracing all the way towards 70. Since then, the last to last week is where it has given a breakout. Now, this is a very crucial move. And the last week's candle is also equally important. It has ended up in a doji. And now the next weekly candle is going to be the most important. A drop below 60 is what you should wait and watch, because if it trades below 60, we might see similar size of candle. And thus, if at all oil prices stays below 50 and closes on a daily basis below 60, we are looking forward to 57.8 and 56 and then 55 levels very soon. Because see, yes, it is consolidated here, drop, consolidation or retracement, first breakout candle, and now there could be a follow-up candle here. Hence, coming week is going to remain very crucial for oil prices if at all it tries to show a breakout on the downside. Now, second thing is on the upside. Now till 65 is not taken, you should not be trading oil for a reversal till $65 zone is not taken. And in fact, even if it trades beyond 65, we have to wait for it to trade above 68. Only and only if oil trades above 68, it's a reversal for the near term, where the prices are going to rally high above 70, rally high towards 75. Right now, I can see the weakness here in oil prices. We have not seen any strength here in the prices momentum, specifically last week. Very sluggish move it was. Look at the weekly stochastic. This has come towards an oversold zone, and it suggests that it has lot much of room available on the upside. Look at the last fall when it has seen this dip, and now again it is at the bottom. It indicates the possibility of a reversal soon. But when you see the MACD, look at the MACD. After the drop, it has been just staying in a zone here. It is now again on the verge of a crossover for sell. And the coming weekly candle will decide the direction, because see, once it delivers a major bearish candle, it will again indicate prolonged bearishness in oil prices for the next few weeks or so. RSI has dropped, which is again a slight bearish sign, but it is right now positioned at a comfortable zone. Now look at the daily chart. On the daily chart, see, notice the drop here, the retracement, the second round of drop, price is consolidating here. And as I've shared in my daily updates, lower highs here, lower lows here, very important for oil to first break beyond 64, 64.5, and then it is very important for oil to now trade about 66. And once it trades beyond 66, we can expect 68, then 70, then 72.4, and then 75. So almost every $2 you might see oil prices might see a stronger resistance here. Now, importantly, on the daily charts, you can see drop, retracement. Now, last trading session, what it has done, it has formed a double bottom, and 62 offered a very good support so far. So, yes, as long as now 62 is not breached, and then the preceding lows, what we had seen last to last week, around 61.2, 61.4. If these levels are not taken, you have to be careful with the selling trades. Prices can still bounce back because see, I do see this as a reversal sign and prices can reverse from this zone. Possibility exists here. Stochastic rising from the oversold looking upwards, and it also suggests further upside here. And specifically when you see the MACD, now look at the MACD. After forming a twin bottom, double bottom, we have seen a stronger rally, then a sharp drop. It is possible that the prices might show a reversal towards this zone. Now, a reversal towards this zone means the prices might, on the absolute numbers, prices might move towards 70, 72 zone. But right now, it is not showing such a strength. It is staying weak. It is looking downwards, and it is suggestive of more downside. RSI is also at a bottom here. Look at the 4 hour. On the 4 hour charts, very important double bottom here. And now once it trades beyond 64, we can expect a good rise here, where the prices might head towards 65 first, 66 second, and then possibly towards 68. It is not showing any strength. That is the most important thing, because see, for this to happen, it should deliver stronger candles. Now notice the move here: rise, retracement, rise, bigger retracement, higher lows, so possibly higher highs. Now coming week, when you see oil trading above 62.8, you can stay with the buys. But then I'll say this is riskier as long as 64 is not taken. The moving averages here are definitely trading with divergence, staying bearish. The stochastic has dropped as well, and it has still got lot much of room on the downside. Look at MACD. Since bottoming here, it has crossed over twice, but it is largely stayed bullish. I'll definitely watch out what it delivers in the next few candles, because that might set the path for the next bull run here. RSI has dropped here, and it is placed comfortably for now. Coming to the important chart, the monthly. Look at the monthly charts. The most important, the crossover here in the moving averages. This sell side crossover in crude oil is appearing after a long time here. Since 2018, we have not seen such crossover on the sell. However, this still not confirms that it is going to stay bearish, because see, this is crossed over. It can stay in a zone before bouncing back here. Now look at the last few candles. First of all, drop here, sideways movement, a breakout move here, retracement. Now, despite it moving all the way towards 78, we have seen three retracement candles. Now, after these three retracement candle, current candle has already delivered low lows. And remember, since the retracement, this candle has the possibility of moving towards further lows at 57.8 before it tries to show any kind of recovery. However, I'll be definitely watchful, because we have seen good prolonged bearishness here in oil prices for months, and hence it should soon show reversal. It is not showing any signs of strength, any signs of reversal as of now. Only thing is the MACD, which has since formed the bottom here. It is looking upwards, which is a good sign here for a complete recovery. And also, see, this was the stochastic that was I was talking about. Look at the MACD. This has also formed a good retracement for almost 2 to 3 years now. These were the highs, these were the peak which oil has seen in 2022, and since this, almost it's 3 years, more than 3 years, since oil has shown any crossover on the buy side. We have to watch out. RSI plays comfortably, and yes, it is looking downwards, which is a slight bearish sign, but it can reverse. So now, considering this, it is time for me to give you the trading levels and strategy. And before I provide you the trading levels and strategy, if you're willing to learn this art of trading, which I think you should, you can join my next mentorship batch. The 34th batch starts 1st of September. Register yourself now. Reach out to me for details. My Telegram and email IDs are mentioned in the channel and video description. And those looking forward to just trade as per the signals, you can be part of my signals channel on Telegram. Again, connect with me for your queries. Also, it is equally important for you to have a trusted partner which offers you a swap-free account, lowest spreads, no hidden charges, easier transactions, and easier withdrawals from across the globe. You can find the recommended broker link also in the channel and video description. Considering this, where you should buy? Ideally, you can buy here at 62.8 levels, but then it is going to be riskier. First, oil has to trade beyond 63.8 163.2 levels, the first resistance zone, then 63.5, 63.6 levels, the next resistance zone. And if these two are taken, then 64, the most important one. So see, very nearly placed resistances. And if at all oil trades beyond 64, stay bullish for 64.5 the next, 65.2 the next, and then 66 the ultimate one. Beyond 66, oil is going to head towards 68 and 70 again. It is not showing such a strength, but these are markets. It hardly takes one strong candle for the trend to reverse, and it can still reverse. However, it is not showing any signs, it is still staying bearish. On the downside, I will only recommend you to sell now at 62 levels. Expect now 62, 61.8 is the first support zone here. 61.4, 61.2 is the next support zone here. If this is taken, stay bearish for 60.6 and 60. Any drop below 60 should take it towards 59.3, the next target zone. Below this, stay short for 57.8 and then 55 levels very soon. It is possible. Anything and everything is possible. First of all, these are markets. And thus, once it breaches past the resistances on the downside, specifically below 60, more bearishness should prevail. Chances will be high that in fact oil prices might head towards 58, 57.8 and lower levels. Take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live market updates, and join the channel memberships here on YouTube to support the effort. Thank you. Have a great, profitable trading week ahead and a happy weekend. Thank you.